Hello everyone, good morning and welcome to Trading European Open Live here at the Live Trade Room. Now today is Tuesday the 28th of August. Hope you're all keeping well. So without further ado, let me just briefly explain what this session is all about. We're looking for high probability trading opportunities. We have a methodology where we look to conduct a bit of multi-time frame analysis to identify high probability opportunities, and then we go through a bit of a process in terms of being able to execute trades in these markets in a very consistent and disciplined manner, and then once we're in a trade, we then look to manage that trade as effectively as we possibly can, looking to cut our losers short as quickly as we can and look to let our winners run. So in principle, a very straightforward approach. And we hope you will enjoy what's ahead, all with one aim, and that is to book in consistent returns. Okay, so let's start then by just with our risk warning. Of course, it's very important for a trader to understand the risks involved in trading these financial markets. It's the embodiment of that risk is what allows us to generate the returns that we see, just because we are so disciplined when it comes to managing and controlling our exposure to these markets. Again, something most new and inexperienced traders really struggle with. So hopefully you've had a moment to read that. So just before we begin then, let's do a quick review of potential market moving news. And as we always say, there's a very, very important reason for us as traders to look at the news flow for the session. And that's really to see if we get into any trades, are we likely to get a lot of volatility coming into the market during that time. And we can see through today's price action that there's very little sort of major events today that have the potential to impact us considerably. Now, looking outside of the sort of the news flow, as you can see currently up on screen, we currently have some major geopolitical risks on a global basis. There's NAFTA trade talks. There's an agreement with the Mexicans, and now the US are turning their attention on Canada and potentially offering a similar deal to them, if not an improved deal. But talks are well underway. In addition to that, there's trade war talks with China and Europe, and there's lots of geopolitical tensions. Whatever part of the world you seem to look at right now, there's Brexit negotiations, sanctions with Iran. So lots of sort of macro events that can obviously impact these markets. Now, we saw a really strong move in the US equities yesterday off the back of the deal between the US and Mexico. So just important to be aware that outside of these, the actual daily news flow, that there are significant events that are impacting these markets accordingly. Okay, so let's get straight into these markets then, and we'll see what opportunities may exist. So we've been speaking a lot, and certainly yesterday, about the continuation in the dollar weakness, and we're beginning to see that kick in across the board. Now, some markets are actually primed a little bit better than others. So when we look at the euro dollar, we're still effectively bouncing off the low, and it's a really strong linear kind of reversal off the lows. So we're wanting to see a little bit more than just one day of selling to actually create a bit of a low and then to get a failure to the upside, or should I say to see and effectively witness a failure to the downside, which would give us more confidence with regards to the euro dollar that we are now on our way to the upside. So there is a little question mark with some of these. They're at slightly different stages. If you look at this, the pound dollar market, you can see that we've attempted to roll over to the downside, and now we're attempting to break the weekly high, which is the 29.36, and we're not quite at that stage yet. So so slightly different technical setups really in these markets. And yesterday we actually saw some yen strength coming into the market. So we'll have a look at the euro yen and the pound yen shortly. So some interesting developments don't necessarily quite make sense. So we've had the dollar sell off considerably, often off the back of last week's suggestion by Trump and the US administration that the dollar is overvalued, and they would certainly like a cheaper dollar, and maybe the US administration is following policies to make that a reality. So there's a bit of sentiment behind this dollar weakness story just for the time being, but we do want to see whether that gets tested fully or not. So we're still on this downward sort of momentum really when we're looking at some of these markets, and we might see some strength come in to the dollar yen, and actually a break below yesterday's low would actually give us the potential for a high probability setup, and we're below the 11100. So let's see if we get a little break to the downside. With the pound dollar, it's really seeing these prices break above the 29.36. That would be the high probability trade there. Now, this is where we're at with regards to the dollar Swiss. And I want to draw your attention to the technical setup that we're currently seeing. And this is one of the first. This and the dollar CAD are actually in really strong positions to the downside. And when we look at this, we can see that there's actually effectively a triple top up here at these highs. So we've really struggled to break parity, which is 1.00. and we've effectively attempted to break above this level, and we've failed many times. And now the 97.90 is a really structurally important level. You can see the lows just sitting in here. We've attempted to move higher, it's failed, and now we're getting the reversal, and we effectively have nothing but air underneath this level. So that is something that's really quite important over the shorter term. More recently, there's a slightly downward looking pressure on a weekly time frame. So we could take the high, take the low. So we can actually operate on this level. So the idea is we could be pushing down to this kind of level here. So we're getting eventually that kind of move. So especially if we start seeing some dollar weakness coming in, it could give us some fantastic opportunities in the dollar Swiss below the 97.90 level. So that's our trade idea for this market. That could give us opportunities on the daily time frame, which is what we got into last night, but also on an intraday basis as well. So we're quite happy to see this price breaking below the 97.90. So this is definitely an opportunity for us to get into this market to the downside. We just got to bide our time, and we'll come back to this very shortly. Same situation for the dollar CAD, although in a slightly different position, not as much air underneath it as the dollar Swiss, but we still have this level over here, which we were able to break yesterday to the downside, and we do expect continuation. But we are in this downward trend, so there is differences across the dollar pairs, and all we're doing is identifying this low and suggesting that we're very likely to push down to the 128, which would give us obviously a good opportunity to push this price lower. So this trade is a technical trade as well, and it's going off the back of some the whole dollar weakness trade sentiment as well. So it kind of fits in on that basis. So that is the dollar CAD. So we're really eager to sell this market below the 29.53 level. So we'll come back to this level for sure. We'll have a look at that shortly. The Aussie dollar potentially looking to strengthen, but we've got the same situation in the Aussie dollar as we do in the pound dollar. So we're approaching the weekly high, which is a 73.81. I'll just show you that's this level just above here effectively. So a little bit of patience required really. We want to see the strong structural failure start breaking higher, and then we can add those to the melting pot as well. Same situation for the New Zealand dollar. We're quite close to breaking that level. So we need to see these structural failures across the board, and we've currently got that in the dollar Swiss, and potentially now in the dollar CAD. We're quite close to seeing that as well. And then we want to see the dollar yen start to move lower, and then we want to see all these structural failures start kicking in across the board. So it's almost building, or the early stages of building a bit of a trade hypothesis. So the euro pound is extending higher. We've just got, from a geopolitical perspective, we've got we don't have much confidence in this trade really. We're going into some heavy Brexit negotiations. If you did get into this to the upside, it's a kind of a short-term, short-lived little move to the upside, because this can all change pretty quickly. Okay, so we're just going to step back from that particular market right now. The euro yen just keeps strengthening. A small break above yesterday's high in the euro yen, as you can see, and it looks like we're getting continuation as we speak. So we can delete that level. That's more on a shorter term basis. So there was clearly a bit of support really in this market. So if we start seeing some strength come into the yen, we'll start seeing these markets roll over to the downside, and that's what could give us a really good opportunity. The pound is pretty weak across the board. We don't certainly have as much momentum to the upside. So if we start seeing some strength come into the yen, and we are aware, and of course it's important to keep an eye on other markets when we talk about the yen. But if we start seeing some yen strength kick in, then the pound yen could be a really good tradable opportunity very, very shortly. Moving on to the gold market, we've now seen the structural failure above the 1200 level, even though it's a fairly shallow attempt at making a low, but that's what we saw at the 1182, and now we're back up at the 1211 sort of area, up at this high. So this is running into previous support, which can become resistance, and we have our downward technical upper band as well. So again, if we get a break tomorrow below the daily low, it could give us a good opportunity to capitalize on a little bit of selling coming into the gold market. Of course, as always, it's correlated with the US market, with the dollar. So if some strength starts coming into the US dollar, it could be a prime target. So really with the gold market, we just need to basically get the balance right. So US oil, we have, we're just up at these highs right now. As you can see, we've really struggled to break above that level. Around the $70 level is a fantastic price for oil. Maybe it has the potential to move higher. There is sort of higher lows in here, but on more of a shorter term basis, there's kind of more of a downward looking market effectively, and we could just be at the high of the next leg to the downside. So if I just explain, so if this is a high, that's the recent low, and if this becomes another high and we've got this kind of pattern, so the idea is the next sort of movement in this market is very likely to be lower. So we just want to prepare ourselves for that. It'd be interesting to see if we get like a structural failure where we start seeing this market turn to the upside and get out of this downward moving trend. So we've got to keep sort of our options open when we look at the crude oil markets. So and that's what we shall do. So very interestingly, we had a really strong day yesterday in the S&P, and you can see the same across the US equities. Now, the US equities are performing head and shoulders above European and global equities. As you can see, we've had a bit of a bounce to the upside overnight in the FTSE market. That doesn't necessarily fill us with that much confidence. And the Euro stocks had a really strong day yesterday in the end. The CAC, again, we kind of broke to the upside and we just kept squeezing higher. And just finally, just the Aussie, we had a really strong day and we're getting some continuation today. So global equities looking quite strong. We did see a really large move yesterday, and we are trading summer markets. So in other situations, we'd probably be jumping at the bit to get into continuation on those moves. Not so eager, the fact that the markets are very, very light, and it's only if we get really good opportunities to take that trade. And I want to show you what I mean by that, because yesterday we were monitoring this market very, very closely, for those of you that were able to join us. And sorry, I just want to take you back to yesterday's move. Sorry, I am in the right place. I was wondering if I wasn't, but I am. Okay, so Yeah, so we were looking at this price action. Sorry, some of the lines have been removed, but we were looking at this price action all the time. Okay, let's get into. Let's have a look at this level on a shorter term time frame. So we were down here, and we were looking at this because what you want to see is, I mean, and I'm talking really from a consistent perspective, is that you want to see the market kind of come back, create a bit of a floor, and then you want to see some momentum where you're getting some strong sort of positive momentum to the upside. The problem is, if you look at this price action here, you're looking at it going, we've just broken, we've been moving sideways for the whole session, session and a half effectively. Just moving sideways, that's all this market has done. And then when we get the breakout, we see this here, and that's a bit perplexing. That's not what you want to see. You want to see much more volatility start to kick in. And then you just start seeing this market just sort of almost die in front of your very eyes over the next 2 hours. And you're thinking, right, that's not great either. And then you get some choppy price action and the market opens, and it gives you very little opportunity to get into it. So this is one of these situations where we were wanting to push this market higher, but as you can see, we didn't really get an opportunity. We were looking for this market to pull back and to then move to the upside, but we didn't really get that opportunity. And this is the point we would like to get across, is that you want to trade these markets consistently. You don't necessarily want to be jumping into markets at the highs. It's not ultimately a recipe for success when you trade. So therefore, you see situations like this, and we were looking to buy it all session, and we didn't really get the opportunity. This sort of price action and very, very shallow price action there before the open didn't really give us the opportunity either. So it's a good example in terms of getting the analysis correct. We're obviously wanting to take this market higher, and of course we then start sort of squeezing higher during the latter parts of the trading day, and then during the Asian Open it starts to squeeze higher again. So a fantastic sort of trade. Just didn't get the price action necessary to get into it, which was a bit of a shame. Okay, so that's the global equities. So we can keep a close eye on those, but as you can see on a daily time frame, there is right now there's a bit of hesitation at those highs. So so from a trade plan perspective, then we've got our dollar Swiss market. So we quite like the idea of this market lower, and the dollar CAD. So we can monitor those very, very carefully. And we shall continue to look at the S&P. Really strong move yesterday, so we'll continue to see, and we're sort of breaking new yearly highs as well. So very likely to see continuation to the upside. So what we can do today now, we can split our trading screen into three. And as you can see here, we were already looking yesterday all day at the dollar Swiss, selling the dollar Swiss and selling the dollar CAD. So we shall we'll just put these three markets just in here. So we'll have the dollar Swiss, and this is the process of obviously putting high probability markets together. And now we can really focus on them for the session. And we'll see what opportunities they give us. So we're looking at these on a 15-minute time frame. And we're getting these moves lower as we speak. So we'll go into each of these and we'll just have a look at them in a much bigger time frame. The first thing I want to do is to just take note of the high in this market, which is just up here. And to take note of the low. Okay, so currently we're pulling back off the highs, so we'll keep a close eye on this. So the market that really interests us is the dollar CAD. We're seeing the momentum, almost the run up to the low. So now we see how this market behaves. And if we get a break below the 29.53, we shall certainly see if we can capitalize on a breakout of this market. So this has been moving sideways after yesterday's really strong, relatively quick devaluation in this market, and now we're just currently moving sideways. So what we want to see is this market trade below the 29.50 level. Okay, let's stick our level just below this low in here, 29.49. If we start getting a break below that level, this could give us a really strong opportunity to see continuation lower. And that's the trade idea for this market. So now we'll just take that analysis over this market here. We'll take note of yesterday's low. So we've now got the close on the 15-minute time frame just below the 97.87 level. So at least we're able to capitalize on a good profitable trade here. There was a 24 pip winner, I think, down to these lows down here. At which point in the early evening, we were happy to book in profit on that particular move. So that proved to be a good trade. I'm getting a bit of a bounce off this low as we stand. So now let's go into just a smaller term time frame, and we'll see. We've closed below. We've actually technically. Let's go in on a minute time frame as well. So we're very likely to see a little bit of resistance actually around the 97.90 level, which is just a little bit above. In fact, we're there now effectively. But this range is only a 6 pip range between the highs and the lows. So even if it creates a bit of a structure around the 97.90 level, and then we get the break lower, then we've got actually quite a small stop loss. We could put in a 8 or 9 pip stop loss in this market. So that's dollar Swiss. What we've been noticing recently, so let's just recap then on some of these markets. So we expect the S&P just on the right hand side of your screen to just move higher over the shorter term. So let's see what price action is in store for us here, and we are interested in potentially looking for opportunities to sell these markets, even though these are at really strong levels of support. So it's really breaking the support, and it's really important that we are somewhat patient with these markets and don't get into these markets above these levels of support. Try to be consistent, but we're looking to sell the dollar Swiss. below the 97.84. That's the level that we're looking at to sell this market to the downside, and that same level in the dollar CAD is the 129.49. So we're only 13 pips away from that breakout. So we do have a structural high in here. So those are the three levels. So now do we get this market extending lower, or do we get a structural failure back to the upside? We shall have to wait and see. So currently we're getting a little bit of a pullback then on these two trades as we look at them. The only what you'll notice as well is that if you get really long range days, which we saw yesterday, and we saw a lot of selling coming in to the dollar Swiss and the dollar CAD, you're very likely to get a prolonged period of just sideways moving price action, because what that does is anyone that's selling this move from a psychological perspective, if you were involved in this yesterday and you're holding on to this trade, you would want to see this price action behave as it's behaving, but you wouldn't want it to break above the 29.86. If that happens, you'd start getting very nervous about this trade. You might start thinking there's a really strong opportunity to get a bit of a reversal. And what we normally find during these periods, really strong flush to the downside. And what we find during these periods is that your sellers start getting really, really nervous. And it's only if we get a really confirmed break below the 29.49 level that they start feeling a little bit more confident about the trade. So, and what you often find with markets like this is a little bit of, especially during lighter trading conditions, you can see the volatility effectively come right out of the market from this move here yesterday to where we're at now. So a massive difference between the volatility in these markets. So as a result, we get a strong move, it moves sideways. The idea is what we're looking to trade is the next move to the downside, and if we start breaking above the 29.86 level, we're currently below the weekly lows as well, so that helps the sellers for this market to continue lower. But if we get a strong reversal, the reality is we're probably still going to extend moving lower. We're just going to experience a pullback, and what you'll get is all of these sellers taking profits, making sure they don't, they try to keep whatever profits they've been able to generate, and look to get in again at these lower levels, or maybe at a slightly higher level to get in once more. So the psychology of the markets is constantly evolving the whole time. So do bear that in mind. So we're seeing a bit of a double bottom now in the dollar Swiss. So we're getting a little bit of a pullback off the lows. And that's on a 5-minute chart, so let's see it on a 1-minute chart. So there is your double bottom, easy to identify, and then we're getting the break to the upside. Now this market has quite a long way to go, really. It's kind of level of support is right up here at the 9800. Now we're only 7 pips away, so it's not too far for this market to travel. But some of these sellers are now getting out of this trade, and we're seeing a little bit of bullish price action start to kick in. So let's see how the dollar is looking elsewhere. So we'll start with the euro dollar. Let's just see what sort of, not an awful lot happening there. Same with the pound. Bit of strength coming in, reversing yesterday's lows, but we'd expect this market eventually to roll over to the downside, and below the 110.93 would give us a good sell opportunity as well. So we're only 20 pips away from that potential trade as well. So yeah, we're just monitoring these. We're getting a bit of a pullback, a bit of dollar strength maybe. We're getting a retracement off the lows, so there's some weakness creeping into the Aussie dollar. Nothing really happening in New Zealand. Yeah, the euro pound is just going to pull back off these highs very, very likely. We just don't like the general price action in the euro pound. Potential for yen weakness or continued yen weakness. We're just not seeing any strength or weakness, so we don't really sort of have what we would regard as high probability opportunities in some of these markets. So maybe in the coming days we will do, but just right now, not so much. So maybe we get a bit of selling on these highs begin to kick in. Okay, so just lots of markets really for us to effectively kind of maybe stand on the sidelines. Maybe that's what these markets are sort of telling us right now. We did have really strong moves across many markets yesterday. In the end, now it took all day for those moves to start delivering, which again is the precarious position of trading summer markets. So just bear that in mind. We're going to start seeing volatility increase, which is what we want to see. It's what gives us the opportunities. It's what makes trading these markets worthwhile and gives us some fantastic opportunities and really strong trades to ride. And we're going to start seeing traders coming back to their trading desks towards the latter part of this week. And certainly next week would constitute normal trading, certainly normal trading hours, let's say. So all your financial institutions, all of those that work in those are taking a really nice long break over the course of this month, and you'll start seeing the likelihood of seeing these strong moves during the Open, the European and the US Open consecutively. So that's when we normally capitalize on the bigger moves in the day. But for some reason over the course of the summer there's been a lot of late day moves, which are fine, but they're moves that occur during the lightest markets, and it kind of smacks of a bit of manipulation and a bit of price movement. Okay. So that's what we're looking at really as things stand. We're still looking for those sell trades. The other market we'll just keep a close eye on is the is the dollar yen. So, but that is below the 110.93. So not much movement really so far. The other thing, yesterday was bank holiday in the UK, so now we're getting sort of UK traders coming back to their trading desks and clearly biding their time by the looks of it. So we're quite happy selecting opportunities to sell the dollar Swiss, the dollar CAD, and eventually we might look at opportunities in the S&P. don't really have significant opportunities elsewhere, really, as things stand. And the one market I'd like to look at is the crude oil market. And we'll just have a look at this market in a bit more detail. There's a bit of selling creeping into this market just at these highs. Let's just see what it looks like on a... Yeah, really a break below the 68.70 level in this market would be an interesting level. It'd be a strong structural failure actually. We're marking it as yesterday's low, so really that's the level that could give us a potential sell trade in the US oil market or the crude oil market, WTI. Okay, so so those are our trades. That's our trade plan currently up on screen. We just need to, we're going to leave the S&P just open just to monitor price action, see what's happening with it. Not an awful lot has been happening with it the last 3 hours, as you can see. So we're not too far away from these breakouts in these markets. So let's see if we can achieve those or not. And if we do achieve them, we'll trade them. And if we don't achieve them, obviously we'll have to be extra patient once more. So we'll see how we get on with those trades now very shortly. If you do have any questions about the way we identify opportunities, how we execute trades, what our approach is to trade management, psychology, any aspect of trading these markets, you know, we can use times like this to answer any questions that you might have. So do feel free to post them into your chat box. You know, and I'll be happy to answer any questions you might have, or if there's any markets potentially that you are personally looking at, do post it in again into your chat box, and I'll be more than happy to look at those markets. Okay, so let's have a... So we were talking the other day about the pound New Zealand. Let's have a look at it on a daily time frame. Quite choppy price action. Hi Cliff. Yeah, you're just mentioning the DAX. That's the one market which we do not have access to right now. Now apparently there's some reason for that. I don't know if it's to do with the exchange and them accessing the DAX, but for whatever reason we don't have access to the DAX right now, but apparently we will do very, very shortly. So hopefully we'll get some notification on the DAX this week, which is strange because we used to have it. So it's been taken off the platform. There is some discrepancy or something to do with the charges for providing the DAX or something along those lines. But apparently they're sorting it out, and we will have it back very, very shortly. So apologies for that, but what we can do, we can have a look at the stocks, we can have a look at the CAC, just to give you a bit of an understanding. So the European equities are kind of significant. They're kind of behind the US equity markets. They're in a very different state. Largely a really strong, rangy, kind of sideways moving market since October 2017. So we'll let you know. Yeah, we can absolutely have a look at the NASDAQ. So we'll let you guys know as soon as we have the DAX back online, because we do like trading it as well. So we're told it should be sorted out pretty soon. Just not sure what soon means, but hopefully we'll be notified shortly. So yeah, just looking at the European equities, we're effectively in quite a large range bound sideways moving market, but nonetheless it's sideways moving as we look at it from a market condition perspective. And the Euro stocks sideways moving again over the last year and a half, let's say, effectively sideways moving, with a slight bearish angle to it. I think it's probably fair to say. So the market's clearly met with resistance around these levels. So if we do get a little bit more of a pulse to the upside, we're likely to get some selling coming in around the 3,500 level, something like that. With a slightly downward, there feels to be this downward pressure being applied to this market, as you can see, just continually pushing these prices lower. And it's just very likely for that to happen again if prices get up to that level. And I suppose that's the beauty of technical analysis. We can actually wait during price action like this and say, right, well, this isn't necessarily the opportune time to get into it. If the market starts to sort of lose a bit of momentum and starts to turn around, maybe somewhere in and around this level here, then that's our high probability trade. Whereas right now, it may well turn into a really good opportunity. We just want to be super consistent with our approach. So we'll monitor it closely, but you can see the downward sort of pressure that's being applied, and you want to see the market really fizzle out, struggle to break the highs, and then get the momentum to the downside. So that's what we'd be looking for. So sorry, moving on to the NASDAQ. Yeah, all of these markets have had a really strong move yesterday. We were trading the S&P 500. So we got the trade idea was pretty solid. Now we've reached these highs to 29.01. Let me take you over to the NASDAQ. And a lot of it was off the back of the trade deal with the US and Mexico. So let's look at it on a 15-minute time frame. So again, we had this strong level of consolidation, which is kind of what we want to see. We want to see this market moving sideways. And then we got the explosive move to the upside. Again, with some strange price action at the beginning of this move, which certainly wouldn't be normal. And we got this market, squeezing to the upside. So previous levels of resistance preventing prices from pushing higher can become levels of support. And that's effectively what we're seeing. We're seeing a little bit of a bounce just off this previous level. Okay, we're a tiny little bit above it, but effectively it's the same level. And we are now sort of quite close to all-time highs again, the 75.83 level. So this market has every potential to just roll over to the downside if we get a break below the 75.59 level. So we just need to... Yesterday was the move effectively, and you could argue the day before was the prelude, but we were running into major resistance around these levels, and yesterday we were able to get the break above that. Still difficult to actually trade it from a trader's perspective. The price action has moved higher. The opportunity to get in was not as high probability as the actual move itself. That's quite synonymous with summer trading markets. On occasion, you can do the analysis and not get the opportunity as you would ordinarily like to navigate these markets with a certain degree of consistency, and that for us is waiting for certain price moves to occur for us to get into it, i.e. a pullback. So when you don't get that, you want to try and stay consistent as you possibly can with your approach. So yeah, that is the Nasdaq. Cliff, do you mind me asking, do you have any particular bias? Would you be looking to buy it, or are you looking to sell the highs, or what would you be looking to do with the Nasdaq? Maybe you could post it into your chat box for me. In addition to that, let's go back to our trades. So we're getting the dollar Swiss just look like it's attempting to make a new low. Same with the dollar CAD. We've kind of rolled off the highs once more. So let's see if we get that attack to the downside. Okay, Cliff, you're suggesting to sell it. This is the beauty of the financial markets, you see. So you could ask 10 traders or 10 profitable traders what would they like to do to this market, and they'd probably all give you very, very different answers. So that's the reality. We're getting quite close to this little breakout trade here below the 97.84. Let's see if we get just continuation in that market. While we keep an eye on this, we go back to we can go back to looking at this market just in here. So we'll keep a close eye on this market here on the left hand side, because it's very close to potentially getting into it. Yeah, so you're suggesting to sell this market. Now here's the problem that we have with looking to sell it. Let me zoom out a little bit more. So if I asked you to just comment on this bit of price action from sort of March 2018, if you were looking at just this price action, and I said to you, what would you be looking to do with this market? I hope you would agree, but from a sort of a visual perspective, yes, there is traders that look to sell these kinds of levels, but we hope you would suggest, well, actually the trend is moving to the upside. So therefore, if that's the case, and we would agree that that's the case, it's clearly the case, there is a clearly defined channel effectively in this market, and you can see it. What we're strong advocates of is trading what we see. We do realize there's lots of trading educators out there that are advocates of sort of selling the highs of these markets and buying the lows. Now we do buy lows, but they're pullbacks. They're not sort of scalping these lows just on a hunch or whatever analysis is applied. What we think traders get much more benefit from on a long-term basis is actually looking to trade the trend and knowing how to navigate a trend, because obviously the market is moving to the upside. Yes, there is opportunities to scalp and to reverse, and occasionally we do take them if we get the right kind of setup, but overwhelmingly probably 80% of our trades, maybe even 90% of our trades, are all trend related trades. Now if you ask me what could I do to the 80% of traders that really struggle to make consistent returns, the advice I would literally look to give you would be focus on trading the trend, because when you get a move in a trend, you're able to see your count balance grow significantly. And if you're scalping, I must admit it's more of a personal opinion, but it's a personal opinion where we have worked with literally thousands of traders up till this stage, not just myself, my partners here as well, and the other traders at the Live Trade Room. We've been in the industry for quite a while, and overwhelmingly probably the biggest reason, there's actually a number of really significant reasons, but one of them is the methodology that they're adopting, which is based on the perception that you can sell the highs and buy the lows on a consistent basis. And yes, those can be profitable, they're viable. They are certainly for more your experienced traders that have been perhaps trading these financial markets quite a while, where they don't give the market the benefit of doubt, where they don't, if they see the market turning around, they have the skill set to get out of those trades using discretion. And most new and inexperienced traders haven't sort of developed that ability. So certainly if you can trade the trend, you can trade kind of any kind of market setup, but you want to be changing your approach depending on the style that you're adopting. So you agree it's been an uptrend. So for us, we're really strong advocates of trading the trend. If you can identify it, you're looking for opportunities, and trading can become a lot easier to look for opportunities, you know, like if we're looking to trade this trend, and you can capitalize on loads of little mini opportunities to take this market further to the upside. Yes, you do need to sort of be patient and wait for the really high probability trading opportunities to get into. But if you can do that, you can add to your trades. On many occasions, you could identify a really strong breakout trade continuing higher. If you have your trend lines, you know that there's plenty of scope for this market to push higher. Yes, you do get to roll over the double top, pulling back, but then where does it pull back to? And if you can do your analysis, and they don't always have to be winners, but when they're winners, you'll see your account balance really start ticking up to the upside. And it's all because you're trading the trend. So it's by far the safer trade to take. And now we're up at these highs. I'm not saying for a second that you're going to be wrong or anything like that, but at this point, I'd rather, certainly looking at this price action, I'd rather be looking for opportunities to buy rather than opportunities to sell. And a good example of this is, we said if we get a break below this kind of channel in here, if we get a break below for this type of channel, it absolutely could give us an intraday opportunity to sell this market lower. But it doesn't mean that our bias is to the upside, just because we want to go with the trend. So it might be the fact that we get price action that allows us to get in at the 75.40 level to capitalize on this move to the upside. So if we get in, what we do is, let's say we enter at this price 75.58, and we have our stop loss just up here above this level, and we look to capitalize on that move. We have a very, very different psychology, different approach, different methodology, where we're gonna be a lot more strict with the trade management on this trade, because it's a counter trend trade. It's a structural failure of a trend. So what we're going to do is, as the market is moving for us, we're going to look to bring down our stop loss as this market is moving in our favor, and be really tight and not give it that opportunity, because we know if some bulls come in at these lower prices, we're likely to get blown out of the water in this trade, because it's a reversal trade. And that's what we were saying about experienced traders can see that happening, and they are very willing and able to get out at these lower levels and book in that much profit and avoid the volatility in the direction of the trend. So and that's very well what may happen. But what we want to keep in mind is that the type of trade that we'd be trading, it's a counter trend trade. Sorry, it's a let me do that again. So let me take that off. So a break below this level in here could give us a really short-term opportunity to sell it, but it's a counter trend trade. And that's the problem. We need to manage it slightly differently. If we know the market is going up like this, and we're trading the trend to the upside, and we happen to get in on a breakout of that level, place that stop loss, we can be a lot more relaxed is not the right word, but as long as we're seeing higher highs and higher lows, we're not so anxious with this trade, because the market is moving to the upside. We've already done our analysis and we know that that's the case, and then we're more willing to go with the market. But here, if we start getting this market sort of even attempting to kind of reverse, we want to be out. We want to book in that profit. So we want to sort of try and be a lot more aggressive with our counter trend trades than we are potentially with our trend trades. So that's just certainly from our opinion, Cliff, that's kind of our analysis really on counter trend trades. Yes, viable opportunities can be profitable. They do come with their risk warning, and that's the fact that the trend could kick in at any time. So you need to be super aware of that. So that's really all we're suggesting. So yeah, I hope that makes sense, Cliff. Do let me know if it doesn't. So yeah, that's just a little bit of sort of our own opinion on counter trend moves. So I apologize, guys. I'm just conscious of the time. We do have traders over there at the live trade room. Yeah, listen, my pleasure, Cliff. I hope you found it useful. So look, we are seeing actually this little move kick in here. So what we're going to do is we're going to, in fact, let's do this analysis just right now and just see if we can get into this as things stand. So what has happened here is we've got our level. It's the 97.84. We've closed below that level, and now we want to see, do we get the follow through, and actually we don't. So we've had the pullback, we've had the exhaustion to the upside, and now we're interested to see, do we get a break of this height, and do we get a little mini structural failure back to the upside, or do we get the momentum start to kick in, and do we sort of break these lows, and do we continue on the way down? So it's worthwhile just pausing, getting the confirmation to the downside. If you're looking to sell a market like this, is very important. We do see it. This is a Marubozu close just in this candlestick. So ordinarily it would give us just a moment to just pause, and when we see the pullback, we then now want to see what is next in this market. So if we get a reversal and we get a little structural failure to the upside, we can just pause a little bit longer, and if we get a little flush to the downside, then we could look to get in around the 78.80 level. So there we go. So let's get into this market then. So we'll take this trade. So let's see if we get a close below that level. I'm sure we will. So we're going to take our normal trade size for this trade. We've been taking a lot of really short. So let's see the close of this 1 minute market. So there we go. Oops. Okay, so so we've got the close beneath this level in here, and for now we shall look at for now we'll just focus on a very short, almost a bit more of a scalper's trade. So it's only a 5 pip stop loss in this market, so a very short, small trade. We do expect this market to continue lower, and this is just taking into account the spread. So we're just let me take a note of the high. We've just placed this level just a little bit higher, actually, just to account for. So it's a tiny risk trade, and we're very likely to get a really strong move to the downside. So let me show you what we're trading and why we're trading it. So we're looking for air beneath this level, so we're quite happy to get into it with normal trade size. We have been looking to adopt a safety first approach really with a lot of our trades just over the last week or two, and that's just because of the market conditions. But if we're seeing which I assume we will be, like the euro dollar trade, so yeah, we're seeing a little bit of weakness creeping into these markets, and that's really what these trades are about. We're not quite there yet with the dollar CAD, the Aussie dollar, and there's a bit of strength coming into the New Zealand dollar. So there's a little bit of, again, that dollar weakness just creeping into these markets, as you can see, and we're looking to get into that trade sooner rather than later, and nothing much is happening. So what we're going to do, guys, I apologize for the time, but we are we do have traders over at the live trade room, so for the remainder of this session. So far so good, but we do want to see this market extend lower, and if we get an opportunity as well in the dollar CAD, we shall look to jump onto that as well. So so what I'd like to do is to offer anyone joining us, Cliff, if you would like to join us on a more of a permanent basis. We're trading the markets all day, every day, live, where we look to capitalize on these markets in a very consistent and disciplined manner, and you'll see how we get to grow our capital on that consistent basis. So you just read the description below. We're currently offering a 14-day free trial as well, so you can join us, taste everything that we offer. We've got an unbelievably comprehensive education available for all traders of all experiences, and we want to offer sort of live intraday trading sessions so that you can obviously learn with full support from us here at the Live Trade Room. And we also have a capital growth webinar every evening at 9 PM for those that want to grow capital by trading daily time frames, which requires much less commitment from a time commitment perspective. In addition to that, we have our daily trade watch released every day, which identifies high probability opportunities before the European Open, and we have things like our mentoring trading sessions and our weekly trade plans and things like that. So it's a comprehensive education. The good news is if you decide to take us up on a 14-day free trial just to taste kind of what we're offering, if you decide to stick with us, it will just cost you $9.99 per calendar month. So we do very well out of trading these financial markets, and really it's more of a contribution to the infrastructure, really. So hope you find it incredibly affordable and all in all a really enjoyable experience, and that's available for you. So do have a look below and do sign up for that. So what we'll do is we'll switch across then to the live trade room right now. If you do sign up, we can get access out to you straight away. So hopefully we'll see you online very, very shortly. So all that's left for me to do now is to thank you very much for joining us. Do take care. We look forward to seeing you next time. So from everyone here at the Live Trade Room, do take care. We'll speak to you soon. Bye for now.